All right, I'm going to stand over here because there's an OHS risk for female heels right there. You can only see that when you're a woman, because this is why gender lens is so important in all professional groups. Right also in OHS, right there as well. You've struggled with it before, I saw that. All right, okay. So I spoke to my son last night. He's 10 years old, before I went to bed. And he said to me, I told him I would be speaking to you today, and he said to me, okay, Mommy, so if you speak to the Greeks, you have to remind them of Demeter, who was the goddess of the earth and the fertility, and you have to also remind them of Poseidon, who's the god of the seas. And that the gods, the Greek gods, are very angry right now because of the mess that you guys have made out of our environment. And he said, and you are the adults, and you have to clean it up for us. So I'm passing on the message from my son. I think he's probably right. I'm from the financial industry, and I think as banks we have a very big responsibility in this conversation. I don't know if you've read the Bloomberg News this morning. I did a little bit, and there was an article that was called, hang on, I've written it down. Banks tout their green credentials, but they cling on to their fossil fuel clients. And then one of the statements in the article was that the banks basically are financing the collapse of the earth. So I thought that was a strong statement. I hope not all banks are like that. I know a lot that are not. I'm going to talk a little bit about my bank. I represent the European Bank for Reconstruction and Development. Going in the right direction here? Yeah. We are a multilateral development bank. Our stakeholders are governments, so we have a mandate beyond the pure financial mandate. We have also a very strong political mandate. And that is to help countries transition to market economies that are competitive, inclusive, well-governed, green, resilient, and integrated. It's a lot, but we believe this is truly the only way for a sustainable development going forward. Very quickly about the institutions. So we were established in 1991, initially due to the collapse of the Soviet bloc, to help the Eastern European countries and the Central Asian countries in that transition. But since then we have grown a lot. We have 67 shareholder governments. Over 60% of them together are European Union countries and the European Union itself. So I would say we are a very European bank at its core. We have a capital base of 30 billion and a AAA rating by all of the three major rating agencies. Just a very quick map here of the countries that we work in. As you can see, it's in Northern Africa, Eastern Europe, Central Asia, and around the Mediterranean. The numbers, I'm not going to bore you too much with them, just showing you that in terms of sectors, we are quite evenly distributed. We work in the corporate sector, everything that you guys work in or with, manufacturing, agribusiness, the financial sector, of course, property, tourism, and then, the financial sector is another quarter, actually. We put the equity funds in here because some of them invest directly in these sectors that I mentioned before. There's also a quarter in energy and a quarter in infrastructure, and a lot of my colleagues have talked about that before earlier, Brian and Heather. Our infrastructure approach is also a sustainable infrastructure approach, so we look at infrastructure quite holistically, I would say. Greece is a very important country for us. We have been increasing our investments in Greece a lot over the years. So far, we have invested almost 3 billion in your country, and our current portfolio is about 1.6. All of it is private sector. I think that's significant because a lot of the other development banks, they work a lot with the public sector. They give loans to governments, basically. And we do that too, but it's a very tiny share. And in the case of Greece, we only work with the private sector. Why do we do that? Well, we do want to help your country to tackle the consequences of the financial crisis and the economic crisis, of course, help a little bit with the structural challenges that the economy has to overcome, and on the path of recovery. So we do this by focusing mainly on foreign and domestic investment, strengthening the private sector, hence the high 100% private sector share that we have here, and also regional integration, which we think could do with a bit of deepening. There is a whole document about our strategy in Greece. If you're interested in it, you can pull it up and you can read it. It's on our webpage. There's the link, and it's going to be shared. And our portfolio in Greece looks also quite even. We have about a third in sustainable infrastructure, a third in industry and commerce, and another third in financial institutions.
No minister.
Very quickly, here are some of the clients. I know several of you are here, Alpha Bank and Ote and Piraeus Bank. These are all partners that we have here in Greece who we financed and that we've worked with. And why do we do this? We really work for a sustainable entrepreneurial economy, and that should be inclusive for all and provide opportunities for all. The sectors, I've already mentioned them a little bit. I'm just leaving that up there for a second. And how we do this is by providing direct finance. So we provide loans, we provide equity, and we provide indirect products which are also equity or loans, but they go through financial intermediaries, like, for example, the programs that we have inter alia with Piraeus and Alpha Bank, and actually all 4 big banks here in Greece. I don't want to talk too much about the product, so I think I'm going to just skip over this a little bit. If you're interested in knowing exactly what, how can you work with us, please come back to me, because what I really, really want to talk about is this, sustainable finance. You've already heard a lot about it today. You've heard from Michael that there's a strong push at the European Union level for regulatory changes through the sustainable finance framework. We also see an increase in demand in sustainable finance. Investors are asking for it more. And we at EBRD, we believe it's the only finance that there should be. So the way we do this, maybe why we do this, we know that there is a high cost if you do not take ESG seriously. It is actually really, really expensive. I've seen many projects losing a whole lot of money because of a or several environmental and social risks. Sometimes even one of them. I remember in a previous position we were financing a wind park in Mexico on indigenous land, and it was environmentally a very, very good project. It had a huge environmental positive impact, but socially it was very difficult, and the bank who was sort of financing that together with us, they did not maybe have the right capacity, or they didn't maybe take the social aspect as seriously as they should. And it spiraled very fast into a situation where local communities blocked the access to the site. Nothing could be transported to the site. There was unrest. There was basically no license, no social license to build the project, and it never happened. We lost a lot of money. The other banks lost a lot of money, and the social cost was obviously not monetized, but was very, very high. So it needs to be taken seriously, I think. We also know that there is a positive impact on financial performance. We've heard it a little bit before. We've spoken to that. We think it's a fiduciary duty. We need to take money management very seriously. It's a big responsibility. And we're also doing this because we know it protects our reputation and it protects us legally. Today everything is very interconnected. We've seen this morning a lot about social media and communication, and I'm actually not quite sure. Somebody said this morning that the affected communities don't have a voice and they can't tell us, or they don't tell us when they're negatively impacted by a project. That is probably true in big numbers, but the democratization of communication through social media has changed that. And we're getting a lot of inquiries from people that live around project site that we invest in, and we get a lot of also complaints and very direct communication. So I think that may not necessarily be true anymore, that the communities don't pronounce themselves. So, and rightly so, we want them to pronounce themselves. I'm not saying we don't want to. Yeah, it's important to factor it in. Just very briefly, we know that there has been a growth in responsible investment funds. This does not quite define exactly what responsible investing here means for each fund. They have had some kind of ESG strategy, may not be all exactly the same one. But over the last years, you can see that it is steadily growing. And here is a little bit the types of strategy. The most used is still the negative or exclusionary screening. It's basically a simple decision to say we won't finance certain sectors. That applies to EBRD as well. We don't finance the defense sector, we don't finance tobacco, we don't finance hard liquor, we don't finance anything that is under a phase-out or an international ban of some sort. So, for example, ozone-depleting substances, etc. So that is just a first step, a complete no from us. These are things that we don't finance. Then another strategy is the ESG integration. I still think that some people understand different things from this. It basically means that you look at E and S and G risks as part of your risk management strategy and include that in your business. The corporate engagement shareholder action is then the next one. We do that a lot in terms of corporate engagement. We speak obviously with our companies. We are also an equity investor, so while we're always in the minority stake, so the influence is then maybe a bit limited, but still we always push for sustainability topics in our relationship with the client. And I'm going to show you in a little bit how exactly we do that. Maybe just before I go there, on the macro themes, Paris alignment is something that we're working on right now very strongly. We have an agreement with the other multilateral development banks, the African, the Inter-American, Asian, and so on. So we're trying to come up with a way to align all our business with Paris. I think at EBRD we're already on a pretty good shape because we have the GET approach, that is the green economy transition, which is it's a very detailed approach. There's a long document on our webpage that you can read if you want to know the exact details. It basically highlights, or it spells out what exactly we, to avoid greenwashing, also from our own side, what we find reasonably counts as a green project. And we have committed ourselves that by next year, 40% of our annual bank investment will be for green investment according to those criteria that are there. 40% may not sound a lot, but it was quite ambitious for us because just very few years back it was 25%. So it's a big jump for us. I still hope we can push that far more. Think ideally everything should be GET, although of course we also finance a lot of things that are maybe not green, but they have very strong social impact, etc. So we would need to amend that approach. The GET approach, together with our other main impact strategy, so to speak, we have a strategy for gender equality. We also have a strategy for transition, which is sort of the process to move on to those more democratic, more resilient, open market economies. That I would call sort of our impact field, where we really define for us positive targets, things that we want to put our money to. But we also know it only works well if it's coupled with a very sound environmental and social risk management approach. And this is on the other side of the slide. We have an environmental and social policy, which exactly spells out what we mean by that, by environmental and social. And it includes the performance requirements. The performance requirements is the heart and soul of our ENS framework. It is 9, the performance requirements are 10 standards that we apply, and they are here. We apply these to every single investment, okay? So for me, it is super important, and I'm probably going to be repetitive because I keep saying that again and again, but I think it's very important. I know, or I believe, that sustainability in finance only works when this is truly wired into the DNA of the operations. It cannot be a PR exercise, it cannot be a little CSR exercise, it needs to be fully integrated in everything that the bank, in our case, or the company does. So this is the way we do it. We have 10 standards. What do we look at? The first one is about environmental and social assessment and management capacity. So we will review our clients to see, okay, what do they have in place? Do they have a policy? Do they have certain procedures? Do they have enough staff? Do they have assigned responsibilities? What's their governance for ENS? So this is all that we look at under PR1. Then 2 looks at labor and working conditions. Michael talked about it a bit earlier in relation to the sustainable finance approach. This is the one bit that is currently in the sustainable finance approach on social. To me, social is not only labor, but it's a good start. We need to expand it, hopefully, over time in the European Union approach. Resource efficiency is a big one. Then, of course, health and safety. That is both because sometimes we work with companies, for example, big construction projects that employ 50,000 workers. So health and safety looks at the health and safety of the workforce, but also outward looking of the communities around that. So for example, if we build something, there's a big construction site, there's a road, and there's a school right next to it, we want to make sure that road safety is absolutely accounted for and children don't get hit on their way to school. Resettlement is a very big topic. I'm sure you had to deal with it also in your projects with big dams and renewable energy. It's maybe a good example also of sometimes the E and the S being in conflict of each other. We have seen a lot of projects. I've mentioned the wind farm example. Sometimes big hydro projects are another good example that are environmentally great, but socially, maybe it conflicts. Yeah. So we need to find a way to account for the social in a way that does justice to the communities that have to live with that project. Yeah. Biodiversity is, of course, a very important one. Also here for Greece, we know that we have a very high biodiversity. Indigenous peoples is a topic that we pay special attention to. Then cultural heritage. That's about, for example, having a good procedure of chance findings. Let's say you dig up somewhere in an area where ancient cultures were, or you could find things of cultural value. Of course, we can't allow those to be destroyed or removed, or so there have to be provisions in place to protect that. PR9 is a little bit the odd one out here. It's a special standard that we have for financial intermediaries, so for all of our banks and all our equity funds. We have a little bit of a different approach there in the sense that for all the other PRs, and direct investments, when we directly finance a project, we manage them ourselves. We go, we do the due diligence, we do the monitoring plan, we do the action plan and the follow-up. For financial intermediaries, we delegate that to the bank. So or the equity fund. So for those kind of clients, we work a lot more on what would otherwise be PR1, sort of on the capacity side and on the system side, to make sure that they have what it takes to manage their risks effectively. And then last one is stakeholder engagement. It is sometimes a difficult conversation to have with the private sector for competition reasons or fear that negative news may affect them. Obviously, some clients struggle more than others to be transparent and open. We think it's very important. We also do that for ourselves as a bank. It's very important for our corporate governance and our checks and balances. We have a very proactive, I would say, stakeholder engagement. We have councils of civil society that advise us or give us retro feedback. We obviously have a complaints mechanism, which is something we also expect from all of our clients, where members of the community or employees can voice grievances or can ask for information or can give feedback. And then, of course, it includes this whole area of public consultations around larger projects, which we've also heard a little bit about earlier. The whole philosophy of our ENS work is, I think, quite well summed up here in the mitigation hierarchy. Our first objective is always to avoid negative impacts on the ENS side as much as you can. We just need to avoid them. The second, if you can't avoid them entirely, you try to minimize them. If you can't minimize them either, because there's always some residual risks that can't be minimized, then you mitigate them. And the very tip, what you can't mitigate, you have to compensate for. So none of our projects can actually create irreparable harm in any way. And then I was asked to talk a little about what have we learned, because the EBRD has been doing this for 3 decades now. In our mandate, when we were founded in 1991, it was already there that we can only finance anything that is environmentally friendly and socially inclusive. So we have been improving our system, our environmental and social management system over the years, and my personal experience in this context is about 15 years, so these are just a few things that I've put together a little bit loosely, but I think maybe make for also an interesting discussion. So we've said it before, not managing ENS risk, it is very, very expensive. Yeah. So I can only recommend everybody to take this seriously. We often hear, oh yeah, but we can't afford it, the measures are expensive, we can't hire staff for this. If you start having a good look at your balance sheets over the years, every single client that I've talked to, they have a lot of money in there somehow booked that maybe is not booked as ENS, but there are losses because eventually of ENS risk. Whether there was a flooding or an adverse weather event that caused some damage, or whether there was social tensions or a high staff turnover, whatever it may be, every company knows this, and every company has factors of that. Yeah. Second point, I've mentioned it before, we need to take the E and the S and the G equally with equal importance. Right now, because of course of the climate disaster that we're facing and the public debate about climate, the E is usually very much at the forefront. And while I'm not saying that it's not important, I think it's very important, but we need to look at the S and at the G as well. Prevalence of the different ones can very much differ by sector. So you can have a project, as I said, that could be environmentally great, or it can be socially great, but on the environmental front it's not so great. So we need to measure that on every single occasion. Then I like to call it the 40-60 rule. Context is really everything. We have a lot of frameworks. We heard a lot about reporting today. We heard a lot of different standards about different performance requirements, like in our case. I think all those frameworks are very important and great because we have to use them to make sure we go through everything consistently. But in my experience, applying them only captures about probably 40% of what the actual project looks like. So in order to capture the 100%, we need to go out there, we need to visit the project, we need to see, we need to talk to the communities around there, we need to talk to the people on the ground, and really take account for the very specific context of the project. The most important thing, it is not a sideshow. I truly believe it only works if it's integrated fully with the financial risk management of a company or a bank and with the core business as well. It does not work if it's a little secondary, ancillary thing on the side. Then we often hear, oh God, we're overwhelmed. There's so many standards out there, what should I pick, all this work, how can I go through 10 performance requirements? I'm not an OHS specialist, I'm not a biodiversity specialist. Yeah, we aren't either. So you need to pick your strategy and you need to tailor it to what your investment looks like, or your company or your business looks like. You make a determination, you make an analysis, and then you pick the things that are most material to your business. Yeah? And with that, you can start functioning. And then maybe as time allows, you can expand or you can add to it, or maybe your business changes and you need to adapt. It's never done, okay? We update our environmental social policy every 5 years together with the performance requirements. So it's never done. We can continuously work on it. Top management buy-in is key. That's what I've seen. If management is not on board, then it's not going to work, okay? So you need to push your leaders to look at this, or if you are the manager, then you need to buy this first, and then you can implement that. See for yourself at the side. I've said it before, look at the projects as much as you can. Paper does not give you a real flavor for E&S. There's a lot of things that data can show you, how many accidents have happened, how many spills have happened, have you had any fines. So there's some things that you can get reports and it's useful, but it's never the whole story. So as much as you can, if you want to take this seriously, go out there and see for yourself. In the same note, it's my view that doing a proper due diligence and visiting your projects and your investments, it beats a rating at all times. A rating is good, especially if you have a huge portfolio and you just can't manage it. But there's a lot of limitations of what a rating can show you. And the last thing, and I've actually said it before, it is a journey of continuous improvement. So. It's never done. I think we have a good system now after 30 years, but we're learning with everything. We're adding stuff constantly. In our last policy review this year, we've added themes that that didn't have so much importance for us before, like animal welfare or AMR, antimicrobial resistance, when you get resistant to antibiotics, these kind of things. So new topics come up. We've also heard it from Matt that you've been dealing with different issues at different points in time or different things. But I think that's the beauty of it, and I think I'm going to close with that. If there's any questions?
All right, I'm going to give you 5 minutes to answer 5 questions. Okay?
All right.
So first one, what's the difference between minimize and mitigate in the context of EBRD assessment of an investment?
Between minimize and mitigate? So minimize is you try to reduce a risk, yeah? And mitigating is, say, you accept that there is a risk, but you take measures to protect yourself from that.
Does the EBRD consider the Greek private sector as completely separate from the public sector?
No, of course not.
Because many major companies have been relying on governmental contracts for many years.
Yeah. No, of course not. The beauty about EBRD is since we are a public institution, so the government of Greece is one of our shareholders. So everything that we do it goes in both directions. We have just decided that for our work with Greece, we can have the biggest impact working with the private sector.
Great. What do you think of the principles for responsible banking? Does it add value?
I like the initiative because it's industry-driven. It is from a group of banks that brought this together, and I think what I heard from some of them say to me is that they wanted to get ahead a little bit of the regulatory push that's going to come from the EU Sustainable Finance Framework. So yeah, I think it helps. I think it's good that a lot of big banks and companies got together to find one language.
You said that you've been contacted by communities in affected areas in Greece.
No, not in Greece.
Well, there are a lot of investments in renewables, not in my backyard, mentality.
Yep. Correct.
What do you think about that? How do you hear all sides? You make sure that you hear both sides of the investment?
Yeah, so especially the renewable energy projects, we put a very, very big focus on the consultations. So we do our own, of course, our own due diligence, which also looks at, okay, are there any houses around or who's affected how? Are there any, I don't know, if it's a wind park, is there flicker on my house? So people get crazy because they have like flashes in their eyes all the time. There is a lot of consultation requirements that come already through the national requirements, so we follow that very closely. And where they are not in alignment with our performance requirement 10, we ask them to do more. So it's a very important point.
Great. And the last one, it's a more technical one. What metrics you use for an investment? Return on assets, return on investment, market-based, accounting-based principles? Which is the most unbiased index?
We have I think we have like our own system, because what we measure, we call it the transition impact. Mm-hmm. So It's not only
Transition
a
to
financial
what?
measure. Yeah,
Transition
to the 5 values that I had on the initial slide, to make them green, resilient, open market, democratic, etc. So we have a whole bunch of indicators that are not all financial. So some are financial, some are ENS, some are governance, some are macroeconomic. It's a bunch,
Right.
but it's our own framework.
Thank you very much, Maya.
Thank you.